Welcome to Invested in Climate. Protecting the planet and decarbonizing the global economy is the challenge of our time. Never before have so many people rallied around a common cause. We all have a role to play, and the opportunity we face is unprecedented. Invested in Climate aims to help people do more to address climate change through their work, investments, learning, lifestyle, and activism. I'm your host, Jason Rissman. I co-lead a climate venturing practice at the design firm IDEO, supporting early-stage climate founders and organizations. I'm also an investor and startup advisor, and have realized that when it comes to climate action, I'll be a lifelong learner looking for the best ways to have a climate-positive impact. If you like what you hear, give us a good rating on Apple, Spotify, Google, or wherever you found us. Follow us on social, subscribe, and spread the word. Find episodes, sign up for updates, get in touch, and visualize your climate action at investedinclimate.com. Thanks for joining.
The models say we need to remove something like 10 billion tons of carbon dioxide per year by 2050. So when that challenge turns into an opportunity, 10 billion tons per year, something like $100 a ton, that's $1 trillion market.
Hey everyone, get ready. This episode has a really meaty conversation about what could be one of the most important new technologies for addressing climate change. Here's some context. The world has started working to decarbonize virtually every sector of the economy. Yet even if we had all the political and corporate will, investments, and incentives one could imagine, this would still be an incredibly complex process that takes decades. And so we'll continue to emit carbon dioxide and other greenhouse gases for longer than we want. Essentially, the faucet will stay on, and we need other ways to reduce the amount of carbon in our atmosphere to slow and eventually reverse climate change. That's where carbon removal and today's conversation comes in. Today we're joined by Tomás Alvarez Belón and Tito Jankowski. Tomás is a climate investor at Collaborative Fund focused on decarbonization. Tito is CEO of AirMiners, a community of innovators focused on removing carbon dioxide from the air to reverse climate change. These guys are true experts on carbon removal, and really, they're pioneers helping build the industry from scratch. I learned a ton and think you'll enjoy. Here we go. Tito, Tomás, welcome to Invested in Climate. Really excited to have you here today.
Likewise.
Great to be here.
How are your days going? Is this going to be the highlight or any other remarkable things happening today for you?
Oh, this is definitely the highlight of my day. I've been looking forward to this for a long time. And Jason, it's been a delight to listen to your episodes and the way you guide conversations. So it's an honor to be here.
Really pleased to be here. I've got some Stella's Bakery in my fridge for after the podcast. I've got a cream puff and a slice of their cake from San Francisco.
Wait, I didn't realize we get prizes, we get rewards after this? Yeah. This is great. All right, send one over my way. That sounds delicious. Very cool. All right, well, we're here to talk about the work each of you are doing and to learn about the opportunities of carbon removal. Before we dive into that meaty topic, let's first get to just know you a bit. Tell us briefly, what are the organizations that you're representing? What's your role? And what is it that you personally do every day? Tomás, why don't we start with you?
Sure. So I'm an investor at Collaborative Fund. We're a New York-based venture fund that's been around for over a decade. And we back founders that are pushing the world forward. We really like to find folks that are at the intersection of for profit and for good. And we like to invest in them really, really early, anywhere between a pre-seed round and a Series B. And this, I think, has lent itself really, really well to investing in climate, and as we'll talk about, in folks working on carbon removal. But we typically invest anywhere between $500,000 to $10 million. And we really like to support founders as they scale in their journey all the way through becoming public companies. So we've done that really successfully with companies like Impossible Foods, Beyond Meat, et cetera, et cetera. And we're really, really excited to now double and triple down on climate as the wave has come and really all the tides are rising. So we're really excited to be partnering with folks like Tito and AirMiners in the ecosystem because there's just so much more work to do. So my job on a day-to-day basis is to go find crazy people working on extremely hard problems and take crazy bets. And so Yeah, it's an absolute pleasure to be in the startup ecosystem at this moment. It's challenging, and we can talk a lot about how investing in climate is different, but there's a lot of good work to be done, and there'll be a lot of successes. So we're really excited about what we're seeing in the ecosystem.
Thanks, Tomás. Tito, what about you?
Yeah, my name is Tito Jankowski. I'm the CEO of AirMiners, and we're all about changing the status quo. We want to empower risk takers to accelerate the reversal of climate change with carbon removal. And of course, the way we do that is we have an incredible community, startup accelerator, we're starting funds, and it's all in service of how do we pull gigatons of carbon dioxide from the atmosphere economically. My background is, getting into this was really looking at that whole buffet of different climate solutions back in 2016, 2017, and really got pulled into carbon dioxide as this is the key bottleneck. And how do we work with carbon dioxide? How do we take it out? That's what I get to do every day at AirMiners. We just had our demo day, our second demo day for our startup accelerator today. And so we're really, really excited with where things are and where they're headed to.
So I think an obvious question to start with is to ask why. Why are you focusing on carbon removal? Why is it important to you and more broadly to the effort to address climate change? Tito, why don't you kick us off this time?
Yeah, why carbon removal? If you look at the charts from the climate scientists at the IPCC, getting to and maintaining a stable climate at 1.5 degree warming, 2 degrees of warming, all of these scenarios require carbon removal. 100% decarbonization isn't enough. Simply turning off the faucet on carbon removal is going to be an incredible feat, and we also need to be pulling carbon dioxide out of the sky. And that's the case for carbon removal. And if you do the math, so on the IPCC, the models say we need to remove something like 10 billion tons of carbon dioxide per year by 2050. So when that challenge turns into an opportunity is 10 billion tons per year, something like $100 a ton, that's $1 trillion market. So that's where this gap in our ability to remove carbon becomes something that, we want risk takers to come in and figure out how to do it and build businesses to do it.
Thanks, Tito. Tomás, anything to add?
Here's what I would add is really that piece around the opportunity, right? It's not just $1 trillion. It's everything that comes with it. I mean, we're talking about in 30 years needing to replicate an industry the size of oil and gas globally, right? And so that means that we need folks to actually invent the technologies, to scale the technologies, to finance the infrastructure, to measure the carbon dioxide that is being removed, to help buyers get access to that. And so we need a ton of companies to exist today and tomorrow that didn't exist yesterday. And so what we see as investors is an opportunity to build not just some of the best and biggest, but also the most profitable companies out there. That doesn't mean that all the companies that we're funding today are going to succeed, but that's our job. It's to take risks, to make bets, and to support the folks that we think are going to transform the way that we live. I think if you'd asked folks a couple of years ago, is there a large carbon removal market? The answer was no, it actually barely existed. I mean, I think the voluntary carbon market was something like $100 million in total. Today, it's at 1 to 2 billion. And the projections is that by 2050, it's going to be in that $50 billion range, right? So what we're seeing is a exponential curve that is going to be filled by folks that deliver something really valuable and that's really needed. And if you talk to corporate leaders around the world, carbon removal isn't a nice to have anymore. It's a must have. And they are racing to purchase high quality carbon offsets to help compensate for their emissions. Now, we can dive into the markets of offsets and where there are issues, and there are plenty of them. But I think what Tito and I fundamentally believe is that if we can scale high quality carbon removal, we will go a long way in helping to maintain the Earth below that 1.5 degree target, which is critical. I think, Jason, as you well know, and many of your listeners will know, going above that isn't just, the Earth gets a little warmer. It's floods and hurricanes and fires get exponentially worse every year. And so this is both a real business need, but also a societal existential question that we're looking to address. And so it's about making sure that we can find the opportunities within both of those paradigms.
Well, I definitely will want to circle back into the questions and issues that you brought up related to the carbon credits markets. But first, let's get into a nuance and understand why you're talking about carbon removal and not carbon capture. Let's hear what the difference is and why removal is your focus.
Removal means pulling carbon dioxide out of the atmosphere. We need to get to billions of tons of carbon dioxide removed that's already in the air, that's being added every day. What carbon capture refers to is it's more a subset of decarbonization. So decarbonization means how do we reduce our carbon usage? How do we reduce the carbon that we emit? So everything from switching to an electric vehicle, changing your diet, and carbon capture at a point source are all sources of being able to decarbonize, to reduce the carbon impact of an industry. Where carbon removal is different is because it's about taking carbon dioxide out of the air that's already there. That's when I say we need to get to 10 billion tons per year of carbon dioxide removal by 2050. It's specifically taking molecules of carbon dioxide that are floating around the air and taking them out and removing them on a permanent basis. And that's what makes the difference between carbon capture and carbon removal. Carbon capture is it's a term that's been used for a longer period of time around how do you reduce emissions from an industry. And carbon removal is actually kind of a newer term in a newer industry because it's starting to talk about, we've already emitted so much carbon dioxide that stopping isn't even enough. We actually need to remove what's already out there.
I know when I first heard about carbon removal some years ago, my knee-jerk reaction was, hey, that's cool and maybe kind of dangerous. Maybe we're playing with nature in some untested, unknown ways that could lead to a whole range of unforeseen consequences. And as I learned about carbon removal, that knee-jerk reaction concern faded away, but it's still worth asking, is carbon removal playing with nature in a way that brings unknown risks?
You get at something that's really, really important, which is that when we are deploying technologies at these scales, there can always be consequences that are hard to predict, right? And I think that we are navigating this tension between if we do nothing, we know that the effects are going to be catastrophic. And if we do something, we may help, and there may be other impacts that we need to monitor and mitigate over time. And I think that's where, particularly in the investing community, there needs to be a really different approach than, let's say, a pure Western cowboy capitalism to backing companies that are, let's say, sinking algae into the bottom of the ocean that may have an impact on the life that lives at the bottom of the seabed. When we are burying biomass in deserts, when we are building really large facilities that capture CO2 from the air and store it geologically underground. I mean, these are massive infrastructure projects that are bound to have an impact. I think what we need to weigh as founders, as investors, as a society is, do the benefits outweigh the risks? And that's why what we like to do when we work with founders is to actually engage communities, to be very public and transparent with our science and the research, and to act in a way that is in the best interest of all stakeholders versus we are just building a company and we want to get rich and we're going to forget about everything else. Because I think that's a very, very dangerous world to get in. It's, in a way, a parallel example to what happens in the solar geoengineering world. And we can get into what that is and why that's very complicated. But essentially, the idea with solar geoengineering is that you can modify the chemicals in the atmosphere to actually lower the temperature of the Earth. Now, to date, that actually hasn't been done at scale. But there are concerns that a company could do it and that no government would be able to stop them if it's in another country. And so I think the consensus is, both in carbon removal and in things like solar geoengineering, you need to bring in all the stakeholders. You need to be really transparent, and we need to weigh the risks and the rewards and monitor them over time. But the TLDR, I guess, is that we need to move really fast and we need to be really safe. And that's a hard balance that we need to find.
Thanks, Tomás. Tito, anything to add on that?
The way I look at it is we are running that experiment right now in the sense of we are adding 40 billion tons of carbon dioxide to the atmosphere every year. And I think working in climate means waking up every day and facing a good bit of chaos in the sense of we are adding billions upon billions of tons of carbon dioxide in the atmosphere. We think we understand what the effects are on that side. There's no clone of planet Earth that we can run this experiment again. We get one chance to do this. And so when we look at the tools that we have for carbon removal, I mean, the amounts of carbon that we need to remove are immense. And on the other side of it is we're adding significant amounts of carbon dioxide to the air. And again, as founders, as entrepreneurs, as risk takers, we have to be able to face that and ask these questions. That's a big reason that the AirMiners community exists, is to talk about these things and be able to grapple with them and ask questions. That's one of the experiences in our panel events, behind the scenes with startup teams. Founder comes in and says, like, gosh, I'm trying to build a profitable business, but I'm worried about, is this going to have the effect that I wanted to have? How should I treat my competitors? How should I treat other people that are trying to do the same thing? Opening up about this chaos, I think, is key for making progress in carbon removal. We can't get lost in it, but we do need to face these questions and to work with them and to build a system and a community and a planet that works.
And I think one of the tensions that exists in the community of carbon removal, for example, is how do you work with oil and gas? The debate comes in a number of different ways. The first is, well, those are companies that, generally speaking, know how to build a lot of infrastructure. So should you, as a carbon removal startup, be excited about getting an investment from an oil and gas company or not? Do you actually help oil and gas companies deploy these projects on their sites? Do you allow the carbon that you have captured to be injected into oil wells, a process called enhanced oil recovery that makes oil and gas projects more profitable, allows the startup to be financed and to grow and to scale their technology, but also emits more CO2? Or do you take the other perspective and say, we're not going to touch oil and gas. We're not going to be financed. We don't want that expertise. We don't want that talent. And we're not going to, in any way, shape, or form, kind of be part of that ecosystem. The same can be said of banks. A lot of banks today finance oil and gas and natural gas. Do you work with those banks or do you not work with those banks? There are all these tensions around, as we move towards a carbon neutral world, who is going to be a part of that transition? Who is going to scale those technologies? And each founder, each company is going to have to take a different path, but there isn't a simple answer. And I think everyone likes simple answers. Everyone likes to be really principled. But when push comes to shove, there's a lot of nuance.
A lot of nuance and a lot of complexity. Is that a reflection just of how nascent and uncharted the space is? You're both in the business of essentially getting the carbon removal ecosystem off the ground. Tomás as an investor at the Collaborative Fund and Tito as an accelerator and community builder at AirMiners. And so I'd love to hear your thoughts on where we're at today. Tito, let's start with you. How would you describe the state of the carbon removal space today?
The future of carbon removal looks bright to me. I've been asked if I'm optimistic. And what I say is I'm rooted in what's possible. We've graduated about 70 startup companies from our startup accelerator in the last year. Those companies have raised more than $23 million of venture funding. 3 of them won X Prize $1 million milestone awards. 2 of them won student awards from the X Prize for about $250,000. And of the 15 X Prize milestone winners, 10 of them are members of AirMiners. And so when I think about where we are, we see teams getting started. We see people coming up with solutions, getting traction with customers, raising funding. When I think about what's next, I'm grounded in that, of seeing what's possible in carbon removal.
Maybe to touch on where we are today, I think, Jason, the answer is we're extremely far from where we need to be. Momentum is picking up, and it's picking up incredibly quickly. But just to put some numbers out there, a couple of years ago that we know of, and we may not know every single company out there, and not all of these numbers are public, but that we know of it as of a couple of years ago, the amount of high quality, durable carbon removal that was happening on an annual basis was in the thousands of tons. We are talking about needing to do this about 10 billion tons per year. Today, there are very few, if any, facilities around the world that can, at scale, remove over 1 million tons per year. Most facilities are, again, in the low thousands, though there are now some construction projects that have begun that get us closer to that million ton a year mark, the megaton mark, which we consider an important and major milestone in getting us towards 1 billion tons. So the short answer is, if you just look at those numbers, that could make you really scared. But what's exciting is to see the amount of innovation, the speed with which the number of companies has multiplied. One of the things that we did at Collaborative Fund, where we typically are investing either at the seed stage or Series A and B stage for companies, was to start something called the Shared Future Fund. And the idea with the Shared Future Fund was to back founders really, really early with $100,000 across 100 companies per year that would take crazy risks. And we found organizations like AirMiners around the world that were backing these founders, that were preparing these founders to go into the world and actually funding them so that they could really kick off this innovation cycle. What we see now is that there are dozens of companies taking a myriad approaches to carbon removal. Some directly capture the air from the atmosphere, some take biomass and store it underground, some plant trees. And we need each of those approaches because each pathway has a lot of advantages and a lot of challenges. And so we need a portfolio of approaches that's going to get us to the 10 gigatons per year because there's a lot of work to do. The one thing that is a major game changer, one thing that did not exist a couple of years ago that has made a lot of these businesses viable is the Inflation Reduction Act, which was the legislation passed last year that essentially unlocks billions and billions of dollars in funding for companies that can store carbon permanently. And that is, I think, one of the most exciting tailwinds that we've ever seen in climate.
Great. We're going to circle back to that for sure. Definitely something I want to learn more about. But both of you have really painted the picture of a market that is growing and that there's momentum, but that still are really in the early innings, that it's early stages, that it needs to grow much more quickly. And so the work that you're doing as innovation ecosystem developers is really critical. And I'm a big fan of innovation ecosystem development work, having done that for a long time in my work at IDEO. But I'd love to turn to Tito and learn a bit more about AirMiners, given that you're really focused on that ecosystem development. Tell us a bit more about the work that AirMiners does. Who do you work with and what do you offer them?
So like I said, we're at the forefront of carbon removal. I want to empower risk takers to reverse climate change. So when you think about risk taker and you think about this picture that we've painted around the gap of carbon dioxide removal, this gap of, we've removed something like 100,000 tons and we need to get to billions and billions of tons. AirMiners is built as this place to bring together the risk takers. So bring together the founders, the entrepreneurs, the people that are joining early stage companies. Because if you want to work in carbon removal today, you're working for a startup. You're either starting a startup or you're joining one. It's also a place for buyers, for investors, for people that want to achieve this goal of how to reverse climate change through carbon removal. We've built a community with that in mind from 2017 on, a place for people that want to learn about carbon removal and go on to be part of building a solution. And so what that looks like is we help on education, we help on acceleration, we help on getting people connected together. And it's all in service of how do we do that? And, at times it's fairly nonlinear. I mean, in the sense of you're taking somebody in who they're like, what's carbon removal? I want to learn about it. We're building a community and an ecosystem that supports them to then go on to build a solution. And one data point there, after doing this we've been running our accelerator for a year, and we've had, I just was surveying the teams, and we had 4 out of the 40 recent graduates, their first touch point with AirMiners was our boot up course, it's like an introduction to carbon removal. It's like it's like the principles of carbon removal. And it's so cool to see that non-linear system in effect. It's a community, it's learning from each other and seeing that is creating solutions to go after this gap.
Jason, the one thing I would add is I did the boot up program. I did the boot up program because I loved it and I recommended it to my friends. And it's a place where I continue to turn to when I want to learn things. Tito and the AirMiners folks host events about the MRV of carbon removal or the financing and purchasing of the credits, et cetera, et cetera. So it's not just a place where you enter. It's a place that when you are, quote unquote, an expert, you continue to exist in, because that's where the gravitas of the ecosystem continues to be.
Fantastic. So it seems that, Tito, you are really working from a very early stage, helping people just learn and navigate their entrance into the carbon removal market and then helping them accelerate and get further. I know that it's very hard always to pick favorites. And you already mentioned that a couple were successful in getting funded or participating in the X Prize. Tell us a success story or two, just giving us a sense of some of the best impact that you've already seen to date through the AirMiners program.
We've seen 70 companies come through. They've raised $23 million of venture capital. When I think about the success moments, I think about the companies that have gone on to sell carbon dioxide, whether it's through Frontier, the program that Stripe has developed to purchase up to $1 billion of carbon removal. I think about the companies that are building out worldwide teams to prototype and test their technology all over the planet. I think about those moments where when an AirMiners event and somebody asks for help, somebody says, hey, I really need help finding a chemist. And somebody else speaks up and says, I'm a chemist. And they go on to be co-founders of a company that's, in this case, specifically making carbon fiber out of carbon dioxide pulled from the atmosphere. So everything from those headline wins, being winners of X prizes, all the way to asking for help at those really early stages. Those are what looks like wins to me. And that's why it's so powerful as a way to engage people who want to work on solutions, because whether you're an investor, whether you're a buyer, whether you're somebody who wants to start your own company or help an entrepreneur, that's where we're headed. We've set a midterm goal of for 2030 that we want to remove 1 billion tons of carbon dioxide through the companies that graduate from AirMiners. It's the place to be to align around how do we get on the scale of carbon dioxide removal. We've also had, at our first demo day, we had the Shared Future Fund funded some of the companies. And so Tomás can talk a bit about those as examples.
The demo day was an amazing place where you saw folks that had come into the AirMiners community, some with carbon removal as their goal, some just testing the waters. And a few months later, we're graduating with companies that are very early stage, but ultimately had a clear mission, team that had been formed, and a pathway towards having a techno-economic analysis, which is basically analysis that says, here's how much this is going to cost me, and here's how I'm going to bring that cost down over time. And that's really the bar that we need within the Shared Future Fund to say, hey, we're going to take a really, really early bet on you. And so we funded 5 of the AirMiners companies in kind of their pre-seed rounds. Some are now working to hit another set of milestones. Some are thinking now raising their seed rounds, which is the first set of institutional capital that comes in. And so we're thrilled to see them advance and progress. And as Tito said, they're now on the second demo day, which happened earlier today. The third is coming up. And that is wave after wave how we see this ecosystem develop.
So you're both in this incredible position of getting to work with and see and watch the development of dozens of carbon removal startups. And so I'm curious, what are you learning from them? How is the market shaping up to be maybe different than you expected? Or what are some challenges or opportunities that you're learning about by watching their growth?
There are a ton of learnings and challenges, and I think they tend to go hand in hand. Jason, I think one of the things that we think a lot about at Collaborative Fund is carbon removal ultimately going to be a commodity? And a commodity market essentially means a market in which price is the main dictator of whether a commodity, an asset gets purchased. That's natural gas, it can be electricity, et cetera, et cetera. And that can have a huge implication for the startups, for the investors. If it is a commodity, then we really need to be investing in the cheapest technology, and that might be the only thing that matters. If it isn't, then maybe we need to be investing in companies that can really build a brand and tell a story and engage their customers in a different way. So I think the question of whether carbon removal is going to be commoditized in the future, there's no doubt that today there is a dearth of carbon removal supply and therefore it isn't commoditized, is something that keeps us up at night and that we're working to try and figure out. The second thing we've figured out and learned is that today the market of carbon removal essentially has been created by companies like Stripe that have said, hey, we are going to do an advanced commitment. We will purchase 1 million tons or 500,000 tons from you. And you can deliver those to us as a startup over the next 5, 10, 20 years. And that's an amazing thing for companies to do because it essentially allows a startup to guarantee their demand, to finance their projects with external money, which is much cheaper than if they needed to raise venture capital dollars to finance a facility, and essentially bring additional corporate interest to purchase their products. And so the advanced market commitment development has been huge, but navigating that process is pretty complicated. And that, again, is a place where we turn to Tito and the AirMiners folks to help us and our startups navigate that process. The third is just that it's really freaking expensive to build these facilities. If you are taking a ton of steel and a ton of cement and huge fans that consume a lot of energy, it's going to cost a lot of money. And so finding creative ways to finance that is really, really important. And it has massive implications for the founders and whether they get diluted or not, for the investors and how much money they're going to have to put in, for buyers and how long a facility is going to take to be up and running. And so those are all kind of lessons that we are both learning and working through. But it also means that the folks that can do all those things are going to be hugely successful and build massive companies. And that's what we as venture investors are looking for.
Tomás, you described the possibility of carbon removal becoming a commodity. And I'm curious, what does that look like in practice and what would the implications be?
The implication of carbon removal getting commoditized essentially means that a company can go online and purchase a carbon removal ton from anywhere in the world at the cheapest price. And that 1 ton of carbon removal is essentially undifferentiated from another ton of carbon removal. And as I said, that's why the buyer only cares about price as their main criteria. What that does is it really makes the market extremely competitive. And to be perfectly honest, I don't know that we understand the full ramifications of what that would mean for the companies that are entering this space. But given where we are today and how far away commoditization might be, I think what it should orient us towards is, as startups, building a product that is the highest quality, that is verifiable, and that essentially allows you to build a strong relationship with the purchaser. As we know, Jason, from this conversation, there are buyers like Frontier and Microsoft and Salesforce that are at the forefront of this. Well, if you can secure as a startup a 10-year commitment from Microsoft, that is a game changer that will allow you to stand out in a field of 100, 200, one day, hopefully 1,000 carbon removal startups that are selling the same commodity, so to speak. But again, it's important to differentiate between what might happen and what is the case today, which is incredibly variable pricing, incredibly varying quality, incredibly variable locations for where the removal is happening, the speed at which it can be delivered, et cetera, et cetera. So we're not there yet, but it's something that as investors that think about, in Europe, there's already the European trading scheme, right? Where buyers can actually trade carbon credits and carbon offsets. And so in a way, it's already commoditized.
Okay, that was a fascinating deep dive into the potential commodification of carbon. Let's take things back up a notch. Tito, we didn't yet get to hear what you've learned more generally about this space and what the startups you're supporting really need. Are there any learnings you'd like to share?
One of the biggest takeaways resulted in one of the bigger changes that we made to our accelerator in the last year. When we first started, we were coming more from this idea of supporting companies that were making primarily value-added products. So you're taking, let's say you're growing seaweed and you're making food with it. You're taking carbon dioxide out of the atmosphere and you're making some product with it. And one of the things that we learned from startups is they would kind of go off and in the kind of first phases of our program, they would go off and kind of try to plumb the depths of like the market for that product they were making. So for example, I remember one founder going out and saying, we're going to make this high-end good for the pharmaceutical industry. And then he would kind of come back with not very much. And so what we kept seeing founders do this, and where we saw the teams start to win was some of them would come back and they would say, well, we're really good at removing carbon dioxide from the atmosphere and permanently removing it, and we're selling carbon credits to customers. And so that was something that was a real big shift for our program, because we went from let's support startups to sell all these different products to let's support startups to just sell one product. And that's when things started to really click for our program for teams, is helping teams navigate how do you sell a carbon credit. It continues to surprise us just how needed and in demand that is. We've made this part of our accelerator program, bringing in buyers, bringing in whether they're marketplaces or corporate buyers or corporations that are thinking about buying carbon removal credits. The nuances there of getting those deals is a completely new and emerging ecosystem. And it continues to surprise us. So we've pivoted, we redesigned our program to just focus on that. We went from the first day being, pitch us your company and tell everybody about the product that you're making, to give us 3 ways that your carbon removal credits are best. And we just had an event yesterday where we put out this event called How to Sell a Carbon Credit. And we did it because we saw how catalytic it is for founders. And we thought maybe 10 people would show up. But we wanted to do it because for those 10 people, this is the key, right? And so then I got a message from Jason, who, among other things, runs all of our events. And 24 hours after he put this up, we had the most signups we've ever had for an event. So we went from this thing of oh yeah, we're going to do this anyway because it's really good, and we think maybe only a couple people are going to show up. And we had 200 people sign up in 24 hours. And reading through the signups for people, these are people that they want to learn how to sell a carbon credit for their business, to get their company off the ground, to take the company that they have off the ground. That's a lesson that took a while to really sink in, but we're pivoting everything around how do we simplify that journey for early stage teams? How do we help them go sell carbon removal credits?
Tito, was that event recorded, and will we be able to send the link to it in the show notes?
Yeah, all are public. So we have a bi-weekly event series. The videos get recorded and published on our YouTube channel, and you can also attend live. Claim to fame is there 30 minutes of panel and 30 minutes of Q&A. So you got questions, come on and ask them, and you can talk to people that you can think of it as a forefront, but they're all that further ahead of any of us. But they do have lessons they can share and differences they can find. And yeah, all that, how to sell a carbon credit, is up on our YouTube channel. Are
you going to give us the quick answer? How do you sell a carbon credit?
How do you sell a carbon credit comes down to you need to have your science figured out. You need to have your techno-economics figured out. You also need to know how to talk to buyers. You need to be able to connect with buyers. It's different than traditional kind of startup markets because it's less about customer discovery, kind of imagining who your customer might be. And it's really about we know every customer and we can help you connect to them. But what's important is you have to have your science in order. You have to know where your unit economics are. And you have to have a path to long-term, something like $100 per ton of removal. And so for founders, look, it's more than checking a box. These are deep existential questions about your company. Digging into, is your solution actually removing carbon from the sky? Means asking some hard questions. And we push teams to do that through techno-economic analysis. We bring in an expert who's really great with that, Grant Faber. You can also see, I think we have a recording of Grant talking about techno-economic assessment on our YouTube channel. But facing those questions, we've had teams come back after that week of the accelerator and they say, you know what, it doesn't look like this is actually net negative. We need to either figure out how to make it net negative. And some of those teams say, you know what, we need to go start a different company. It's really powerful to see companies and teams able to face that because this is what's required to sell a carbon credit. You have your science in order. You have to know that it's net negative. You don't have to have it all figured out, though, but you do need to show that you can get there.
I think this is where it gets really interesting, right? Which is what is a carbon credit fundamentally? you don't get a little box where you open it and there's a credit in there. This is, at its core, a promise that a ton of carbon was emitted in one place, and in another, it was removed and ideally permanently stored. The issue in the broader carbon offset market is that there are people that make that promise and don't keep it or keep it partially. Sometimes that may be intentional, but generally speaking, it's actually unintentional. The common example there is you emit a ton of carbon as an industrial company, and you say, great, we went online and we bought a bunch of carbon offsets because we planted trees. And a tree on average removes 1 ton of carbon per year. Therefore, I needed 100,000 trees and I'm good. And you think you are going to have a neutral impact on the world. And you tell that to your customers and your consumers, and everyone feels great. But then a couple of years later, there's a fire, and that fire burns up those trees. And so the tree had captured 5 tons of carbon throughout its life, but when it gets burnt up, that carbon goes back into the atmosphere. And so essentially that promise has been broken. And the issue is that when that happens at scale, the math of the balance in the atmosphere gets really wacky and problematic for everyone. And so I think what Tito and I are dead set on is finding companies that when they make that promise, they follow through, they can verify it, and that it cannot be reversed. And there are many things that go into that. But fundamentally, it is about having really high quality carbon removal, and finding that in the market today as a buyer is extremely hard. And that's why today you can purchase a carbon removal ton that's permanent for $100, $200, $1,000 a ton, because it's really, really rare. And a lot of people need those tons of carbon. So that's also why we think that there's a big opportunities, because there's a lot of willingness to pay for the good stuff. The challenge is there's a ton of the bad credits on the market. And distinguishing those two is extremely hard, even for companies that really care. And so that's why there's often this criticism of greenwashing that gets mixed with carbon removal. But there's a really critical distinction here between high quality carbon removal and general carbon credits.
Fantastic. Thank you. Appreciate that distinction. And now we've talked about the difference between good and less good carbon removal projects, or the difference in quality. We've talked about the need for verification and permanent removal. We've talked about revenue in terms of the carbon credit marketplace. We haven't talked about the cost side of the carbon removal business. So help us understand the economics in this space, what it takes to develop carbon removal projects, and ultimately what the margins can look like and what the margins that you're looking for really can be.
$100 a ton is the number that most reports put out there as the number that is viable at scale for corporate purchasers to buy to compensate for the portion of emissions that they have not been able to reduce by cutting down their greenhouse gas emissions. So that is typically the number that folks work with. Though, to be completely transparent, Jason, I actually think that there's ambiguity around whether that is the cost or the purchase price of the credits. Now, the cost of a carbon credit is going to vary dramatically depending on the pathway that you're using to remove that carbon. So for example, if you're planting a tree, that can cost a company, let's say about $1 per tree or $1 per ton per year. If you are building a facility that is focused on direct air capture, well, you can have a facility that costs you $350 million just to install, much less run, and you're going to have to sell that carbon at $1,000 a ton to break even. So the short answer is it varies dramatically. We look for companies that, if it's on the frontier or engineered solution side, so this really is direct air capture, mineralization, et cetera, can get as close to or below $100 a ton as possible. And on the nature side are substantially below that, but are also really high quality. In the different solutions, we're optimizing for slightly different things. And as investors, just like we believe corporate buyers are going to do, is we're going to look for a portfolio of solutions such that on average, a corporate buyer might buy 10 tons from really expensive DAC solution 50 tons from a forestry solution, 30 tons from a agriculture solution, and the portfolio overall will balance out to something that is below $100 a ton. As investors, we typically look for companies that have really high margins. If you're a software investor, you're looking for 80 to 90% margins. I think that the truth is that carbon removal companies are going to look something closer to oil and gas or mining or industrial companies where margins are substantially lower. And so what we're looking for is for companies that can get really, really, really big. And that's why we focus a lot on the cost per ton and how quickly you can get there. And this goes back to this idea of, is carbon removal long-term going to be a commodity or not? Because that really, really matters then. And as this company scales, it's going to have to find a way to finance itself through debt and project finance such that it doesn't incur all of the costs itself, but it can actually share that with other financial stakeholders in the ecosystem. And so I can't give you a specific range of what the margins are going to look like because it really varies per solution. But I think what matters here is that if you are a project developer, you need to be really smart about how you're financing this company, because otherwise there won't be a lot of it left that you own by the time it gets really, really big. And that's the scale that they need to get to have a meaningful impact in the world.
Tomás, your firm is making a big bet on this space. Tell us about the funds that you have set up, and if you can, a couple of the investments that you've made, as well as perhaps how they reflect on the range of possibilities around carbon removal.
Yeah, so we are an early stage fund. And typically the way you think about this is we invest everywhere pre-seed through Series B. And so that is a company that maybe has one or two employees and an idea, up to a few million dollars in revenue and about 30 to 50 employees. That's kind of the general range of what that means, at least in the market that we have today. So we invest through our seed fund in companies, and then we invest through a second core fund in Series A and B. And that's kind of how we've structured it. Collaborative overall manages about $1 billion. So we're a firm that's grown really healthy way over the last decade plus that we've existed, because we've backed some really successful companies in this space like Impossible Foods and Beyond Meat, among many others. We also have this initiative that we were mentioning earlier called Shared Future. And that is where we do much earlier checks. You can almost think of this as a pre-seed fund. And you are really looking for a catalytic impact in the company. Now, that can mean many different things, but one easy way of looking at it is a founder that says, hey, if I had another engineer, I could hit a milestone 2 years in advance. Or I could, set something up that would allow me to verify that I've sold this carbon removal technology and the carbon is stored, and therefore I will get that revenue much earlier. So in those cases, we provide that $100,000 check and really unlock a lot of speed for the company. And so that's a space that we think is going to see a lot of attention. And we're excited that when Shared Future launched, a number of other parallel funds came in as well. And there are other folks that are paying attention to it. Shared Future doesn't just invest in carbon removal, it invests in climate tech more broadly. But it's one of the many components that we're navigating and investing in through Collaborative Fund. So I think that's a quick summary of how we're thinking about the space. One of the companies that we can't announce just yet, but we backed is one of the DAC players. We're extremely excited about what they're working on. And I think our thesis for this investment in particular is, once again, trying to get to $100 a ton as quickly as possible, really focused around incredible execution. This company has already sold over $2 million to one of the main providers and buyers of the carbon removal credits through an advanced market commitment. And we are extremely excited about that. And so we'll be announcing it in a little while. Another thing that I would say really distinguishes how we work with founders in the space, Jason, is that we work really closely with Stacy, who's the head of climate at Shopify. And so she's an advisor on collaborative sustainability board. And what that means is that we as investors get to talk to her and get her perspective on what's going on in the market as a buyer, what she's looking for, what she's not interested in, how she interacts with these companies. But then also she helps our founders navigate those processes. And so having Stacy on board the collaborative ecosystem, I think, is a major, major asset. And so there are a lot of companies that are supported by Shopify that we're talking to or excited about, but that's kind of a teaser I'll leave. And when the announcement comes up, I'll let you know. We can share it with your community as well.
So for two people focusing on building an ecosystem, you've had, well, some good fortune in that others have invested significant sums in accelerating this space. Maybe this just points to how smart you are for focusing on this industry, but I'd love to hear how helpful others' investments have really been. In particular, Elon Musk sponsored a $100 million X Prize related to carbon removal. And the US government passed the Inflation Reduction Act, which included credits for certain kinds of carbon removal projects. Tell us, how have these things helped the marketplace grow?
The new X Prize that came out around carbon removal is a $100 million carbon removal X Prize. And for AirMiners, this is a story of how we got lucky. We had been building our community around entrepreneurship, around creating new solutions for carbon removal, and we had been building an accelerator program. We're about to announce this. Okay, hey, we've got an accelerator program for all the startups that we know. And then Elon tweeted that he was going to put a $100 million prize up for removing carbon dioxide from the atmosphere. And then we got a call from X Prize, and they said, our vision for this prize is if we can just get all the AirMiners together in a room, we've got this prize nailed down. It was incredibly catalytic. We've had over 700 applications to our accelerator program since then. Our community has grown to almost 2,000 people. Our Boot Up Education course has graduated hundreds of people who want to get into carbon dioxide removal. And so many of them mention that X Prize as the inspiration, as a drive for them to be a part of building a better world. And so definitely have seen that. That was just a major tailwind for us as we started really getting in and working on accelerating startup companies.
In terms of the IRA, it's a piece of legislation that was passed last year. And to think of it in a very visual way, it's essentially adding steroids to a nascent industry. Very tactically, what it does is it provides billions of dollars in funding for carbon removal companies, for hubs of carbon removal around the country. And it is going to make businesses that otherwise may not have been viable, and then really attractive over time. Now, there are a couple of ways in which it does that. I think the one that is most well known is the 45Q tax credit, which essentially says if you take a ton of carbon removal and you store it permanently in a geological reservoir, we will give you some money. Historically, it was very little money, and it was in the form of a tax credit, meaning at the end of the year, you just get some credit for the IRS bill that you owe. What happened with the IRA is it went from somewhere around $50 per ton to $180 per ton. And for the first 5 years of the 12 years that you get that credit, it's actually a direct payment. So the government will send you as a startup money. And that is a huge game changer for these startups where the cost may be around $100 a ton. Well, if it's $100 a ton and you're getting paid $180, you have a pretty nice margin on top of that. And if you can get below that, it's even better. And as you go down the cost curve, you essentially have a guaranteed purchaser of that ton, or at least of someone that will pay you to deliver that product. And so that is, I think, the most concrete way in which the IRA is going to impact carbon removal startups. There are obviously a number of criteria that you need to hit in order to become eligible for it. And there are other positive impacts that it has. But the 45Q tax credit, if you don't know anything about the IRA, is the place to start really digesting why this piece of legislation is so meaningful for the industry. Jason, it's a market that didn't exist not that long ago, right? And having corporate players like Stripe, like Shopify, like Frontier, now Salesforce and Microsoft jump in and say, we are going to lead the development of a new sector, of a new type of asset and product is pretty radical. I mean, it happened with the solar market 20 years ago, but it's a rare occurrence and it takes a ton of leadership. So we are extremely excited about what they're doing. And once again, I think it proves that companies out of Silicon Valley can balance being focused on their growth and their development and their success with caring about the world. And in many cases, doing things that are uneconomical for the sake of tackling climate change. And the mechanism that they have set up today, the advanced market commitments where they will purchase carbon removal tons years in advance, is, I would say, one of the most catalytic things that has happened, because it enables these companies to get financed. It enables these companies to get investment from folks like myself and the Collaborative Fund. And without it, we would be years and years behind. And I think most importantly, it brings trust to the ecosystem. Whenever Frontier goes out and purchases 100 tons from a company, I think immediately other corporate buyers are going to say, oh, well, we know that Frontier did their due diligence. They have dozens of experts on hand that a corporate player might not. And I'm going to trust Frontier because everyone else does. Therefore, I'm going to go purchase my own carbon removal tons from that same startup. And that's the type of chain reaction that really allows a company to scale quickly.
It's worth noting that these are often companies that are also decarbonizing, that are taking seriously their efforts to decarbonize their operations, and that they're not just focused on carbon removal to escape doing that hard work, but they're doing it as an additional component.
Building on those programs, we get to bring in the leaders of those programs. Tomás mentioned Stacy at Shopify. We bring in the team from Frontier, South Pole, Microsoft. All of these commitments, when we get to know the buyers, they're coming from such catalytic positions. These people who are within their organizations leading purchasing carbon removal, they're figuring this out. They're figuring out how to make it work. And it's a huge contribution to the industry, kind of in that sense of both from a press release standpoint, both from like a, leading the industry, but also they're in the industry. They're always coming to AirMiners events. They're always participating. They come to our sessions. One of our first public sessions that we had was at AirMiners, we had just hosted our first conference ever. And then a week later, Stripe announced their first purchases. They had put together $1 million and they had made their first initial purchases. And this was in a press release. And so we wrote Ryan, we were like, hey, do you want to come? Wouldn't it make sense to kind of talk about this publicly or something? So we brought in Ryan, who was at Stripe at the time, now at Lower Carbon Capital. We brought in the recipients of those first purchases, and just being able to share that as a community was really powerful. And so these corporate buyers have continued to be extremely supportive, boots on the ground type people. They're grappling with these same questions that startup founders are. What does this market look like? Where is it going to go? How can I help? What's the gap? That continues to grow. We just had our first buyers demo day in September, and that's where the whole Kiloton Club got together to hear pitches from startup companies. And the Kiloton Club is everybody who's purchased more than 1,000 tons of carbon removal. We're actually getting together with them again next week to look at this latest batch of startup companies that just pitched this morning. But buyers they're boots on the ground. They're part of this chaos that we're all in. We're asking these questions. We're trying to figure this out. We're making a guess, iterating on it, improving it, figuring out where the cracks are, filling them, and building towards this carbon removal world.
Tito, you've described a chaotic marketplace, and this is particularly something that people in large companies feel, that they have huge pressure to decarbonize, to meet all sorts of climate commitments, and everything's changing around them. So it's a new space. They haven't been asked to do this sort of work before, and especially if they're looking at the carbon credit marketplace, there's a lot of uncertainty. You've mentioned some of the examples of Microsoft and Stripe and Shopify. Tell us, for companies that are thinking about getting involved and becoming purchasers, supporting the carbon removal marketplace, why should they do it?
For buyers getting into carbon removal today, the reason to get into this is because the market is still at such an early stage that you can have this catalytic impact, that you can come in and you can be a part of creating this new industry. It means you're going to be able to position your corporation for a future that's coming, for a world where net zero commitments are including a carbon removal component, and that you're not caught off guard by it. That's certainly something I've heard from early buyers is they say, oh yeah, we committed to removing 10% of our emissions. But then they start running the CEO committed, and then they start running the budget. And it's like, well, wait, carbon removal costs 10 or 100 times more. And so that 10% quickly consumes the whole budget. And so the reason to get in now is because you can help shape the future of this industry in terms of your own role as an organization and your own role in taking action on climate solutions.
Tito, Tomás, thank you so much. I've learned a ton and wishing you the best of luck for this important work. Thanks for joining us for this episode of Invested in Climate. Please remember to rate us on Apple, Spotify, or Google. Find show notes, sign up for updates, get in touch, and visualize your climate action at investedinclimate.com. This podcast is for informational and entertainment purposes only and does not constitute financial, accounting, or legal advice. Thanks again.